Hello, Jeff Green here again with another Monday market update for the Arizona real estate market. And we'll go through the slides here, but you can see this is what I'm going to focus on, Arizona real estate. As you can imagine, I read a lot of articles, and the media generally says the market is a disaster. I don't see it. The current numbers don't support that conclusion. Certainly we've slowed down, and we'll go through the charts here and I'll show you what I'm seeing. But I don't see a Phoenix market that's in a disaster at the current time. If you look at the left box here, the number of listings from last week is slightly lower. The listings under contract are slightly higher, so that means that we still have people buying. Days of inventory and days on market are at balanced levels. So I'm not sure how that equates to a disaster if you're at a balanced level, and I'll show you charts on those numbers. And a slowing market shown by a lower annual sales rate. Yep, there's no question that the sales rate has slowed down, but it hasn't really affected prices. And we'll see that here in a little bit. Seller concessions are higher than recent years. Yes, so I think a lot of sellers are using the equity that they built up in the last couple of years to help sellers get into a house with a lower interest rate, but still keep the prices high. So, I'm sort of seeing a balanced market here. Per the numbers, and also seeing no indication of increasing foreclosures. Now, if you're a regular viewer of these videos, you know I pay attention to this because everybody's worried about a 2008 era crash. Quite frankly, I don't see it yet, but things have a habit of changing. So 13.6% of closings are at a price higher than the list price. So that sort of goes in dovetail here with these seller concessions, right? I think sellers are reading the writing on the wall and saying if they're going to sell their house for a decent price, they're going to have to pony up some concessions. And they can still, if they get the right buyer, get a little bit higher than what they put it on the market. This is good for both the seller and the buyer. The buyer is still qualifying at these high interest rates. So we're going to see that in the charts here as we come up. Monthly and annual price appreciation in the Phoenix area for single-family residential homes remains positive. So I'm not sure how that equates to a crash, but let's go through the numbers here. And what I'm seeing is supply and demand appear balanced at the present time, maybe leading a little bit towards the supply side, but I'm not seeing a big problem here. So let's look at one of the first chart here. This is, I'll move my ugly mug out of the way here. This is active listing weekly counts compared by year. Okay, so you can see that in 2022, that's this line right here. We were at a high, a little bit more than 16,000, and we've pulled down a little bit over the last 3 or 4 weeks. So we were higher than the last 5 years. That wasn't unexpected. A lot of people trying to get out at the top of the market. And so these years down here show you how the supply was just crazy low. This was last year and the year before. So we got more on the market, but prices are sort of being supported, which tells me we've got a decent amount of buyers even at these interest rates. And these are just the numbers. I'm not suggesting that we're crashing or growing fast. These are just the raw numbers the way I see them. The next slide is listings on contract, and this clearly shows that the market has slowed. 2022 is the purple line. You can see where we were earlier in the year. We had a lot of purchasing going on, and it's just, quite frankly, slowed down. No question about it. Interest rates have put a lot of people to the sidelines. We did have a bounce up from last week. I'm beginning to suspect that if you're not going to buy in this sort of slight pullback, then you might miss the low of the market. So it might be beneficial if you're thinking about moving or buying that you keep watching these videos and keep an eye on the market as it works through this sort of shift that we're going through. The next slide is days of inventory, and you can see that this really has varied a lot since 2011. Right? We had 140 days of inventory back in February of 2011. That means that it takes a long time to sell a house, 140 days. That was a long time. And then we had a spot in here in 2014 where it was up above 100. But you can see that the sort of the mid average here is about 2 to 3 months, right here in the sort of 80 to 90 days, which is 90 days is of course 3 months. So there appears to be sort of an average line, and you can see that currently we're right at about 78.5 days on market. I'm sorry, days of inventory. We'll look at the days on market slide next. So this means that if no more houses came on the market, there will be no more houses to buy within 78.5 days. So that's a good measure of supply and demand balance, and you can sort of see we're right in the middle of that. You can see in the early latter part of 2021 and 2022, maybe this shows an average of about 20 days on market, but I can promise you that many homes sold within hours of a for sale sign going up. So this was also a low anomaly. And let's look at the next chart, which is the average cumulative days on market. So you can see once again that, yes, we've increased. We know that, no denial there. Days on market have come up to about 65 days. 65 days in my mind is not really a buyer's market yet. I think a balanced market is somewhere in the 70 to 90, 3-month sort of time period. But you can see even with this increase, days on market, it's not significantly higher than the peaks back here in prior years, 2017, 18, and 19. So I don't think that's a crash, but this theme you'll see repeated in almost all these slides. Let's look at the next chart, the annual sales rate. Now, this again, these are years, and you can see in 2022 how it started even tapering off. Even though we had that frenzy, right? We couldn't find enough houses to supply the demand. That's why it's sort of low in the beginning part of 2022, and then has decreased through the year. Now, what's interesting about this chart is if you go back to the 2010, 11, 12, 13, 14, 15 time period, you see this orange color here and this blue color here. Now, if you look over here, let me move my face out of the way here. Again, blue is short sales, which means that bank generally holds a property and will take less than what's owed on the house just to get it off their books. And real estate owned is sold through the same sort of channel. So you can see that these are distressed properties. These are orange and light blue, and they just tapered off. As a matter of fact, you're hard pressed to see any orange and blue in this time period. So those are the sort of environments that create crashes. You can see I don't see that here. Now, will we start seeing these come back in future months? Well, possibly. Don't see it yet. And we're going to take another look at the pending foreclosure charts here in a little bit. But let's get through these sort of sale charts first. Now, this is the percent of closings with seller paid concessions. So almost half of the closings, since July, October, have been with seller concessions. Now, that helps buyers because what happens is that the sellers use their equity buildup to have a contribution from the seller to the buyer so they can buy down the rate. That's a normal thing, and it says two things. First of all, sellers are willing to give up a little bit of equity to help buyers qualify to purchase their house. So that's sort of what this number is telling you. And if you're in the market to buy a house, make sure that your realtor knows how to negotiate seller concessions, and make sure you are working with a lender who can take that concession to use it to pay for an interest rate buy down. Depending on which lender you're working with, you can usually get 2, I've heard of 3 points off the interest rate. So if interest rates are at 7, minus 2 or 3 gets you to 4 or 5. So that's a pretty good interest rate and helps buyers get into these houses. The next chart is the foreclosures pending. And I spent quite a few minutes talking about this last week. Now we're looking at this line here. This is the foreclosures pending line. And remember, we were talking last week, about watching that line to see if we were going to get into a real crash, which the media likes to expound upon to get a lot of eyeballs. But you can see in prior years, 2000, they're all here, 16, 17, 18, 19, we had foreclosure rates up between 3,000 and 2,000. So, that's 2 or 3 times what we have today. And this pending foreclosure line doesn't seem to be growing significantly. So again, I watch this very closely every week. And if we see that start to creep up, then the story could potentially change. But that's where we are on the pending or foreclosures pending at the present time. Let's take a look at the closings per month above list price. Now, we were talking a little bit about that to get seller concessions, but we're still seeing 13.6% of the transactions above list price. Now, that doesn't seem like indicates no demand for real estate to me. That indicates to me that there's still fairly significant amount of buyer pressure, people who need a home and can get into a home for less than they're paying for rent. It's a pretty good deal, especially since the prices in the market, at least in the Phoenix metro area, are relatively stable. The next chart here is really sort of a summary of the average sale price per square foot. So they're both in the green zone. You can see the monthly average over the last 12 months fell a little bit. We talked about that last week. Didn't drop very much between this week and last week. Maybe we're going to create a bottom here. We'll have to wait and see. But the annual average price increases over the last 12 months is still increasing. So I don't know where the crash verbiage is coming from, but that's not what these charts are telling me. So the annual appreciation and the monthly and your annual appreciation is still in the green zone. So it seems to me more of a balanced market than a crashing market, at least to me. And I watch this stuff every day. The last chart here I have is the market index. I think last week it was 90.3 or 90.4 on the buyer versus seller across all indexes or across the market in general. Supply is still in the green, which means we don't have an overabundance of homes coming into the market. The demand index has dropped a little bit. It's now a little bit less than 75, but it's not really showing up in the price numbers and the activity. So this bears watching. I think 90.2 is a reasonable estimate of where we are. You can see the market index trend has been trending down from the hundreds in this time period down to where we are now, which is 90. Now 100 being normal. So we're on a little bit of a buyer's market, a little bit, maybe, but prices are still going up. So I think we're on this sort of seesaw effect where it could go either way, perhaps, or if the Fed seems fit to lower the interest rates because inflation has become less of an issue, I think you might see a boost in real estate prices and activity. And if you watch my other video on when I think the interest rates might come down, you can find it on this channel. So that's sort of where we are in the Phoenix Metropolitan area. So more resources for you. You can just subscribe to this channel. You can click on that link there and get to this channel. You can subscribe for newsletters right here. I promise you, I won't send you any spam. If you're at all interested in the real estate market and what maybe your home is worth, sign up for this newsletter subscription. And then, of course, you can get to all my online resources at jeffgreenrealtor.com. Remember, that's Jeff with a G and last name, The Color of Money. And that's it for this week. Any questions, give me a shout. And I just hope you have a wonderful weekend. Thank you.